If you do have a question while we're chatting in this next session or going forward, please put your hand up. Either Paul or Sally is gonna make a mental note, and we will get to you hopefully a little bit earlier so we can get to all of them. Let me come over here now. Charles McGarraugh is the CEO of Stratagem. We all know that the financial trading world and sports trading have a lot of synergies. Charles is someone who really has made the transition. He worked at Goldman Sachs. He was a heavy metal man for many years, and now is the CEO of Stratagem, which is using models and AI learning to do sports betting and sports trading.
I think I need the clicker for the...
You need the clicker?
Yeah. Fantastic.
All right.
Okay.
So start us off here, Charles.
Sure. So I guess, first of all, what is Stratagem and who am I? So firstly, Stratagem, we're a predictive analytics company. We're based here in London. Most of our staff are basically quantitative and coding individuals. We're focused on predicting sporting events and predicting the behavior of the markets around sporting events. We were founded, not by me, actually, but by my friend who I knew from the financial markets, a few years back. And with the basic idea that if you can build good predictive analytics, then there's things you can do with them, whether it's proprietary trading as a sports bettor, or indeed, using that same infrastructure for B2B solutions in the industry, or indeed even offering a platform to share some of the insight generated from the systems. And then I guess the way we're built is we kind of, and this is what attracted me to the company, we kind of take a machine learning first approach. So the idea is, hey, software is eating the world kind of thematically, not just in gambling, but in many industries, certainly in my previous career as well. And the idea is basically find a good use case for the technologies as they emerge and stay at the forefront of what can be done with the technologies and all that. And then finally, given people ask all these things, we're compliant, basically. Yeah. So that's the company.
So when you were watching Luigi when he was talking, and when he talks about the way you test models,
yeah.
Is that really where you feel that Stratagem comes into the evaluation of models and improving them?
Yeah, definitely a lot of similar thought process up there. I found myself chuckling and nodding when Luigi was speaking about the pain of data extraction and matching and normalization and all that good stuff. It's certainly something that we're up on all the time as well. Just briefly, I guess, I put this slide together just to talk about how the sports markets are in some ways very similar to financial markets and in some ways very different. Maybe it's worth 2 minutes, just my own background.
Absolutely. I mean, obviously you were very successful at Goldman Sachs
yeah.
and the financial. So really, why did you change? I mean, why did you come into sports?
Yeah, it's a great question. So, look, I grew up at Goldman. I had a great time there. I'm still very close to a lot of my former colleagues. And, I was always sort of enamored of the idea of how does the trading process work? How does the investment process work? When I first knew I was going to get a job on Wall Street, I forced myself to play poker because I was terrified of risk. And I made $10 an hour, as a research assistant in the economics department at Yale. And if you lose $200 on a hand, it's 20 hours of work. And so learning how to handle that risk and emotionally deal with that has always been fascinating. As my career evolved at Goldman, the idea of identifying value, committing capital, thinking about the time horizons for it, and finding ways to get paid money to basically bear a risk premium seemed like something that just kept coming up. And I traded lots of different markets. It was interesting to see Doug talking about insurance and derivatives before, because I grew up in credit derivatives and then moved to reinsurance at Goldman, and then ended up in commodities, mortgages, and then ultimately commodities. And the common theme, right, is sort of, value identification, risk management, being humble around when you have an edge and when you don't have an edge, and being thoughtful about that. And all those things seem quite applicable here. As I was sort of getting more senior, I came to the conclusion that quant trading and AI were increasingly important for the process of capital commitment, just in kind of lots of different spaces. And I wanted the opportunity to be closer to that story as it unfolds. And when the founder of Stratagem, who, like I said, was a former client of mine from the markets, called me up and said, "Hey man, I want to focus more on the research side. Would you like to build the business?" I just thought it was an opportunity that was too good to pass up, basically, to basically run an AI research and trading team. So and then I haven't been disappointed. So I've been at it a year and change, and the sports markets are super, super interesting, and they really do bear a lot of similarities to other markets.
What has to happen for the sports, aside from sheer size, for the sports markets to catch up with the finance markets?
Well, that's a great question. So I think the sports markets are first and foremost, the liquidity is a bit more fragmented. And if you think about kind of what does a market do, right? Any financial person will say, hey, a market is a place where buyers and sellers get together to sort of discover the price and transfer risk. But the key thing is, right, there's actually two pieces to that. One is price discovery, and the second is risk transfer. The sports betting markets, by and large, are really defined by the reality that the asset class is super short duration. So if I buy a 30-year treasury bond or a bar of gold, right, that thing's not going anywhere, so I have to do something with it. So when I get it, I need to know what the right price is in terms of what's the prevailing price for other people. But I also need to have the ability to move it around. Sports have kind of evolved separately in the sense that understanding the prevailing price is really important for the bookmakers to avoid being arbitraged. But because the contract is so short duration, it's tended to be a bilateral market, and the result of that is basically customer profiling and cutting off winners, which to a financial guy seems sort of crazy in the sense that like these are potentially your best customers from a volumetric basis. Like if you're running a brokerage, you want your clients to win, right? And the reason you want them to win and the reason you can allow them to win is because there's a market behind you where you can move the risk around. And so that's kind of where we think it's going.
I mean, is it also that what people would say the main difference between the financial markets and the sports markets have to do with whether there is an underlying asset? I mean, originally stocks and things like that, it wasn't a zero-sum game. Essentially, everybody could win.
Yeah.
I mean, how do you...
I think that's a line of argumentation that is certainly well taken. I actually disagree. So I view basically every tradable asset class as basically a place where you can commit capital and take risk, and in exchange for collecting risk premium. So by bearing risk, you should be able to collect risk premium. And I don't really view sports betting as a zero-sum game because at the end of the day, people want to do it. So it exists for a reason. And the reason it exists is because it's a massively compelling entertainment offering for a lot of people. So it does create positive utility in the same way, I think, that issuing debt or equity creates utility by matching users of capital with providers of capital. In the same sense here, you generate risk, and that risk creates value. So I'm going to move on.
Okay, I mean, any questions so far? Because yeah.
Just shout. You mentioned earlier AI and machine learning, which is being used in financial markets a lot.
Yep.
But not so much in gambling and sports markets. Do you think that's an opportunity that's going to become more used in the future?
So the question was, AI has not been used so much as far as machine learning goes in sports, and do we think that's going to change?
100%. So that's basically what our entire company is premised on, is that idea. And I think if you think about, we'll get a little bit ahead of ourselves here. If you think about the process of creating a trading strategy or a portfolio of risk, right? You have a sort of, I like to think of it as there's sort of a pipe, right? You have a funnel where data comes in. By the way, I don't mind sharing this with all of you because this looks like what any quantitative trading hedge fund will have. So this may look like a lot, but it's pretty standard for the financial markets. But upstream, you have a funnel where lots of data goes in, and the goal is to filtrate till the end of the funnel where there's a 0 or 1 for a sell or a buy, right? There's different, when I think of AI or machine learning, there's a lot of kind of hand waving that goes with that idea. So I think it's probably helpful to sort of be a bit more precise in how one describes it. Machine learning systems can classify, so they can sort, bits of data. They can perform predictive, predictive analysis, like through regression style techniques, and for me, and they can cluster, so they can create like for like basically, or say what's like something else, is sort of how we think of what the machine learning systems can do at a more specific basis. And in this process, whether it's upstream at the layer of data acquisition, midstream at modeling signal extraction, downstream from that and strategy construction around the models, or even downstream from that, getting the trades on at the right price. There are different machine learning techniques that are appropriate for each segment of that development process. And we'll show you some of that in a second.
I mean, can you give a real world, I know you guys deal in football a lot, a real world example where how the AI learning might differ from a traditional model?
Yeah, so if you think about how a lot of value betting systems work, right? You'll try to create some kind of description of the world and then try to fit probability distributions to outcomes, right? That's definitely something we do at Stratagem a lot. And then how do you parameterize what's inside the model? You may have different techniques of how you fit things and all that. But you could take an entirely different approach, right? Which is just to say, here's a pile of data. Do I classify this as a buy or a sell, right? No underlying model simulation, just sort of, hey, how do I look for a pattern and do it? And what we like to think about is how there's the potential for, I guess, decay of the edge as the market gets efficient, because really what you're looking for, what Luigi, I guess, termed absolute versus relative predictive capacity, right? It's not enough just to be good at predicting the event. You need to be good at predicting the event in the pockets where the market isn't as good at predicting the event, basically. And so one of the things that the machine learning systems can do is sort of scale that search for the alpha in a systematic way. Kind of a cool upstream example for data acquisition is, look, data is a pain in the space. The infrastructure of the gambling market isn't really built to the same spec as a lot of the financial markets are. Getting all the data at a high quality in a way that is matched and interacting with each other is sometimes difficult. But one of the things that we think is cool is there's a lot of information contained in public video footage, right? So this would kind of go as, what can AI do upstream in the data acquisition process? So we have built some computer vision systems that basically take in the video and then scrape it for relevant data that might be helpful in model building downstream. On this one, I can't hit play on here, so somebody from the AV team will have to put a mouse over the thing and hit play at the bottom of the graphic. There you go. Okay, so this is a computer watching a football match. So this is just public television footage. And using a deep learning architecture, we have taught, I guess, the computer to recognize which pixels in the overview mode are players versus pitch, what team they're on, and what's the ball, and then the lines, and then you can create kind of like a heat map. Once you have the dots running around, you have the XY data, and there's indicators that you can cut from that, which is quite cool.
That's so great. I know a guy who's got 30 people in Slovenia just sitting around watching TV instead. Are you the only ones doing this, or
There's a couple of companies out there that are doing sort of video parsing, right? So from our perspective, we're like, this is cool. Obviously, if you're taking public footage, you don't have as granular of an information set as you would if you had access to the club's data with the GPS trackers or the fixed point cameras or this kind of thing. But even with the data you do have, there's a lot you can do with it once you have the sort of the XY. Another example, I guess, for upstream, I guess it's sort of worth pointing out as well. Like, you need data to train systems, right? and sensible data needs to be interpreted by a human to train the systems first in many cases. So we, like many of the syndicates, have a team of football scouts who basically review footage and collect data at the human level, some of which is then necessary. You need some labeled data, I guess, to train the AI downstream. So if you look here on the next one, maybe we should press play on here as well. So here, this is a video of a football match. And what we've done here is basically train a deep learning system to look at every 1 second clip of footage and then tell me whether or not it's a chance on goal. So at the top of the frame, you see basically the timeline of the video, and the yellow dots basically say, so this is basically going to clips of yellow dots that basically the computer has parsed within just the raw pixels of the television footage. And what it's saying is the yellow dot is each thing that it's recognized as a chance on goal. And the 10 seconds before, so this is, I put in the 10 seconds before the recognition and then the 10 seconds after. But what we've done is basically train a deep neural network to say, is a 1 second clip of video of a football game a chance or not? And this was only possible to do with a large amount of labeled human data, right? Like your average football match will have 15 or 20 chances in it. And we've had people watching games and then tagging the footage, right? And then once you have the tagged footage, you can train the system to recognize. And what you'll see here is there's lots of different kinds of events here that the system is saying is a chance. Some of them are set pieces, some of them are kind of fast breaks, and so forth. So that's an example of what can be done upstream. Obviously, once you have the chance recognition, you can construct indicators from those kinds of things that can then become features in downstream models and strategies.
So I want to ask you a little bit more about Stratagem, but any questions at this point, people, the stuff we've been looking at? All right. And just before we get into Stratagem, so I know it sounds like a lot of what you've done in your life is look for markets that are inefficient and move into them. And I'm just kind of wondering, what do you see in sports betting, or what conditions exist that so you know that a market is inefficient?
Yeah, so I guess I'm going to go back now. Where we go? Right. Okay. Sorry, this is just a quick overview of what does Stratagem look like. We have our human analysts, the middle bit with the analysis, and then what products do you cut from it. So there's some platforms, and then data and price feeds, and some predictive analytics, and then prop trading. So nothing too earth-shaking there. Okay, so what are the opportunities in the space? So at Goldman, or I guess I was a bit of an odd duck on Wall Street because I would get bored easily. So I transferred markets a lot. I was one of Goldman's first credit derivative traders pre-crisis back in New York. Those were some fun times. And then
You've been through the war.
I've seen some stuff, yeah. And then I moved to our reinsurance group, which is again, I was very intrigued by the linkage between insurance and this stuff. So I think what's really interesting, and look, I wanted to move to another market where the perception, that there's potentially some edge to be gained through making things more efficient. Is there, and so the playbook for Stratagem is really no different than what a lot of the quant funds have done in other markets. The basic idea is sort of, if you have the infrastructure and a data ecosystem that kind of is holistic from upstream to downstream, and you build all that infrastructure, so all the data acquisition, some systematized approach to model building, some systemized approach to subject, with a model, how do you construct strategies from it, and then all the infrastructure downstream for how do you actually place, bets on an automated basis in a robust way. I chuckled, like I said, at the issue of matching the event identifiers, because that's just something that securities market people don't even really think about, but it is a huge issue in this space. So yeah, what seemed interesting here is that number one, it's not correlated to the rest of the financial markets, which makes it really interesting that, from the perspective of if you can find edge, it's very attractive as an alternative investment. The second thing is the short duration of the asset class and the high number of events that are repeated. So that just fundamentally lends itself well to systematic risk taking, because again, it's a relatively structured environment where it's not always the same thing, but at least the amount of things that can happen is somewhat contained. Unlike, I'd almost like characterize it as like playing like fixed limit, hold'em as opposed to playing no limit hold'em. Like if you're trading commodities, right, and some major geopolitical thing happens or some major policy thing happens, like you have a sample size of n equals 1 to get it right. Whereas in football, you have to manage your bankroll properly, but you're probably going to get another bite at the apple, assuming you avoid going bust. So so that kind of highly repeated aspect of it seemed interesting, and then the fragmented liquidity. Again, fundamentally, and this kind of gets into this slide, the product in gambling, in my mind, as sort of a newcomer to the market, is at the same time really, really compelling and awesome and fun, and also somewhat problematic, right? So it's fun because it's great to consume sports media and have interests aligned. That is just fundamentally a compelling offer, and people do it even with negative edge at the retail level just because it's so intensely interesting. That said, there's this sort of sinister undertone to a lot of gambling, which is like, I'm not informed. I don't know what to do. It's hard to get information. It's hard to have an opinion that's informed. And so where I think the markets are going, and the industry's been able to evolve that way for a long time, but I think technology is driving a change. And so the first thing I think that's happening, and I can just go through kind of the list, is that with the electronification and with mobile and the rise of in-play betting, it's a much more technology-heavy offering, I guess, than it once was. And technology means information, and data, kind of wants to be free. The second thing is that the product is heavily commodified at the moment, and at the same time incomprehensible, which is really quite an achievement. And operators try to differentiate themselves by offering kind of a long tail of like random things you can bet on at 2 a.m. after you've had a beer or something. And like, to me, fundamentally that's not that great a USP. What would be a far better USP would be give people something that they don't question the relevance of, and actually make them more informed, in the same way that like your broker does. So instead of saying like, hey, bet on Bulgarian handball at 2 a.m, you can be like, it's Arsenal versus Tottenham, and here's what's actually going on. Here's the right way to think about it, and maybe we can help you win. And that makes the customer's experience better, i.e. more entertainment value for the entertainment budget, which is really what it's all about in the context of gambling and sports, competing with other entertainment offerings.
So, I mean, in the same way that you could say that hedge funds transformed the financial industry, maybe in the 40s or 50s, as far as letting the public in a more informed way, is that what you see as sort of missing from sports?
Yeah, I would say, generally speaking, that proprietary trading and liquidity providers in general will, it's my hope, it's also my bet, that will become more relevant to the markets, and that a significant portion of the revenue model for the industry will move to intelligent capital commitment, as opposed to pure just like sort of excessive retail markup.
I mean, who among us doesn't want to buy a share in Smart Odds if offered? Is it that kind of idea, or?
Yeah, I think, I'd like to. So like, what do we want to do at Stratagem? We want to sort of democratize access to these kinds of analytics. So the first thing is, we sell tips like anybody else. You can get access to some of our pre-match football picks from one of our machine learning systems here. We had a bit of a draw. We fixed what was wrong in the model, and now we're feeling good about it again. So there's that, and I'm sure you're all familiar with that basic process. And then, secondly, here we've just, as of a week and a half ago, relaunched one of our consumer-facing platforms called Stratabet. You can all go there. It costs £20 a month, and basically it'll give you expected goals. It'll give you fair form, rankings and all that on and any of the the competitions that we cover, which are 26 competitions. And then I guess equally, or maybe more importantly, during the match, it will just look for outliers in the market and tell you in a way that is comprehensible. And what we did is basically code up what one of our football analysts would look for during a game, and then just pipe it on demand live. And we wanted to price it cheap enough that it's actually accessible to people, so that basically if it makes you one bet better over the course of a season, it's worth it. And the idea is to have basically like in your pocket a pocket football analyst watching the game with you. So that exists now, and so please do sign up. Yeah.
Any more questions?
Yeah.
Please.
Sure.
No, wait for the mic. Sorry.
Hi there. It's Anthony here from Lehman Brothers, actually. Not the Lehman Brothers, spelled slightly differently.
Anthony Lehman.
we're a bunch of computer scientists doing something quite similar. But my question is this: are you trading,
Yes.
or are you selling data?
We're doing both. So the idea is basically, if you think about it from a corporate strategy perspective, if my thesis is I'm going to be the best trader in the market, right? That's a 10 out of 10 on technical difficulty, and it's a 0 out of 10 on business model innovativeness, right? And it takes, to do it right at scale, properly diversified across enough strategies, right? It takes a meaningful CapEx and infrastructure, right? So the question is, as we built that pipe, what else can I cut from the pipe with minimal CapEx in the meantime that could potentially create value?
Okay, but my question is this: if you are trading
Yeah.
and you're taking positions, unlike the financial market where sometimes everybody wins, in this instance someone loses. Somebody always loses. Okay, in each of those moments, how do you stop yourself getting whacked by the bookmakers that say, "Hey, these guys come along, taking a lot of positions, doing better than we like, cut the account"? How does that work?
I don't want to get too far into it, but basically, the exchanges, they don't fire winners. There are certain bookmakers who don't fire winners, and then
These guys good,
and then at the same time,
unless you do too many trades.
right, and then at the same time, we can be paid to provide liquidity to smaller operators who have less balance sheet capacity, and that's that model is actually pretty tried and true in other financial markets where guys will basically provide electronic feeds with real balance sheet behind them. Most of the industry is structured with just data suppliers who just provide data around the inside odds. We'll offer additional capacity on balance sheet as well with the risk capital. So.
Thank you.
Yep. We got some questions over here.
One of the things that I have learned along the way in terms of finance education is that there's a hell of a lot of modelling that's going on in a time series space. This is something that I've seen virtually nothing of in the sports space, particularly the combination of time series modelling plus regression and machine and statistical learning techniques. Do you have any opinion on this? Is this something that you're thinking about or working on, or is it something you've got an opinion on?
I'm not the head of the quant team, so I'm not going to give any sort of really in-depth technical answer. I would say there is a lot to be done with financial style time series analysis, technical analysis, and even at the micro level of sort of market microstructure and trade optimization as well. There's a lot there, and yes, we're spending a lot of time on that.
I think just behind you, if you could pass the mic back, that'd be great.
Yeah, I was just wondering, with the change in market structure, do you see an evolution of maybe contracts for difference in sports betting?
What's
or is
that,
so contracts for difference in sports betting, so where you're not actually using the underlying asset on, say, Betfair or Matchbook, but you're using something like spreads betting and derivatives of it? And also I was wondering, obviously we had the change from 1x2s to Asian handicaps. It became a big thing in making football betting more efficient. Do you see a future where maybe we're using something more similar to financial markets, where you've got the makeup of the market determined by number of goals and work more like sort of a spread betting or a financial exchange?
It's a good question. I don't have a view on what the underlying sort of dominant contract structure will be. I think it'll depend on whatever is most comprehensible as an entertainment product for users downstream. What I can say is having grown up in all kinds of derivative markets and priced lots and lots of derivatives over time, at the end of the day, they're all just contingent payout, vectors, and you just sort of if you have a modeling approach, you should be as a trader, you should be relatively agnostic to how they are. Again, subject to the sort of, length or shortness of the odds in terms of how that skews sort of the P&L trending. So.
Well, I mean, there's also, you talk about the entertainment factor, and I know, and that other thing you talked about, the high churn versus what you see as the low churn, is part of the reason that there's such high churn in the sports industry because they're all short-term binary contracts. And do you see more, perhaps a movement towards longer asset classes? I mean, and that those would be better for the industry. I mean, let's say it was running goals, over the course of a season. I don't even know, but something that gave people a longer run in an asset class.
I could see it. I mean, that gets into the conversation in the previous session about the sort of confluence of betting and insurance and reinsurance. The longer, I guess, the duration of the contract, the more potential, I guess, use cases it may have for non-entertainment based risk management. So whether it's sort of pricing up player transfers or reinsuring outcomes of a season for a club or that kind of thing, I could definitely see that, but we're not there yet. So yeah.
Any more? Oh, we got one more question. Okay.
Are you doing just football?
We're currently focused on football, tennis, and basketball. Yeah, we kind of go back and forth about what else to spend time on, but that's more than enough. Totally different, process of gaining information. Basically, it's just not what we've been focused on.
All right. Thank you very much. I know Charles is going to be outside in the coffee break, so I think we're going to take 15 or 20 minutes and then come back for the next session. Thanks, everybody.